Welcome to the New York Business Leaders Podcast, presented by the Coyle Group. We interview the most interesting and influential business leaders in New York and hear their stories of success, challenges, and lessons learned while building their businesses and personal brands. New episodes drop weekly, so please be sure to subscribe to get updates in your favorite stream. Without further delay, here's your host of the New York Business Leaders Podcast, Gordon Coyle.
Welcome back to the New York Business Leaders Podcast. I'm your host, Gordon Coyle. In this episode of the podcast, I have the pleasure of speaking with my friend, Jeff Weiner, the founder and CEO of HKM Associates, which is a life and group benefits insurance firm located on Long Island, New York. Jeff is going to explain some of his out-of-the-box thinking, especially in the group benefits space, and how he has shifted some risk for his clients and achieved extraordinary savings for them. Please note, I said shifted, not increased risk, and still got big savings for the clients. Also, to say that Jeff is an avid networker is a bit of an understatement. His giver's gain mentality is just about legendary. Not only does he generously make introductions, but he runs a networking group that shifted from lunch meetings twice a week on Long Island to virtual during the pandemic, and that continues to grow. It makes business happen, and he's raised substantial sums for charities through that network, and we discussed that during our conversation. If you'd like to get in touch with Jeff, you can call his cell at 516-316-1255. Yes, he is that accessible. Now, before we get into this conversation, I'd like to say if you have an interesting story that you'd like to tell on this show, why not reach out to me, Gordon Coyle, and let's chat. My email address is gbcoyle@thecoylegroup.com, and my direct dial is 845-474-2924. Thanks for watching or listening to this show, and please be sure to leave a review or a thumbs up. Thanks. Now on to the show. Jeff Weiner, welcome to the New York Business Leaders Podcast. How's it going?
Very well. How are you, Gordon?
I'm doing well. Jeff, you and I have known each other for years, but for our audience, why don't you take a few minutes, introduce yourself, tell us what you do, and then we'll jump into a conversation.
Sure. So I'm Jeff Weiner. I'm the CEO of HKM Associates, which is my own firm. I've been in business for 41 years. And what we do is we do MRIs and CAT scans, but on insurance policies. So we show people what they don't know they don't know. And we spend a lot of our time on education.
That's great. So just to kind of tell the audience, Jeff sits on one side of the insurance fence and I sit on the other side. And it's so funny how our business has been kind of bifurcated between, actually, there's three segments to our business. There's home and auto agents, then there's commercial agents like me, and then there's benefits and life insurance agents like Jeff. So our businesses really don't compete with one another. We complement each other. So let's start the conversation with the benefit side of the business, because you do both benefits and life insurance. And tell us, you've talked a lot about high deductible plans, and your thinking is outside the box than the traditional benefits broker. Why don't we start there and kind of tell us, for the business owner, what you do, how you do it, and why you are kind of contrarian on this concept.
Sure. And yeah, Gordon and I definitely complement each other, because I don't do anything to do with businesses on the property and casualty end of it. So we refer people like Gordon to take care of our clients for that end of it. So on the health insurance side, our approach is much different than the traditional broker. So what do? We sit down with a group, and that group is everything from international tech startups setting up in the US, small group, multi-state, as we are licensed in 34 states, to hundreds of employees. Most of our clientele is what's considered small group, which is 2 to 100. And our approach is much different than a traditional broker. So we sit down with a group, we take a look at their bill and benefits, assuming they have them. If they don't, we kind of guide them and educate them as to how to set themselves up. Like I said, we do work with a lot of international tech startups, Well, we tell them don't set up in New York because New York is what's called a community rated state, which means flat rate single, flat rate family, regardless of age. When you're outside of New York, it's age banded. So with these tech startups that are 25 and 30-year-olds, the price differential, we just spoke to somebody from London this morning. He obviously knows nothing about health insurance, but we told him set up in New Jersey, in Connecticut, another state. The rates for the same exact plan in Connecticut versus in New York were 50% less expensive.
Wow.
Because they're a bunch of 20 and 30-year-olds and they're age banded, so they're taking advantage of their youth. So that's the first thing we kind of guide people as to how to set themselves up if they're a new business.
Now, let me ask you a question on that before you jump into the next topic. And that is does it matter where the employee is physically located or where the business is domiciled?
Business is domiciled. So
Okay.
so like this group has 6 employees in 5 different states.
Okay.
But the business is going to be in New Jersey. So that's where we're going to do the business from, even though it's multiple states, multiple people living in multiple states, not an issue.
Which we're seeing a lot of today, not only in the tech space, but across all industries. If it's,
Correct.
Thinking or services-based business rather than a product-based business, multi-state is very common. We see that.
Yeah, especially with COVID, with people working all over the country.
Right.
Now they're moving to those states that they kind of visited. And now they're saying, you know what, I could run my business out of Florida or
Right.
wherever. And
Right.
so now it's a different approach. So the first thing we do is we take a look at a company's bill and benefits. Then if we're going to move them from one carrier to a different carrier, then we get a list of their doctors and their employees' doctors, and we do doctor searches on the doctors. This way, nobody has to switch doctors. Like we've been doing a lot of work in Massachusetts, and Blue Cross of Massachusetts is kind of like the carrier up there. Well, I didn't know when I first wrote a group in Massachusetts if United Healthcare was going to be a similar network to Blue Cross. It is, and Blue Cross for small groups is not age banded. It's flat rate single, flat rate family. So the first firm we looked at, we saved them 30% on their premium for the same exact plan because it was age banded. So we do the doctor searches on the doctors this way. Nobody has to switch doctors, even if they're switching benefits. The second thing that we do that makes us unique is we run employee meetings for all our groups. And when I run the employee meetings, we tell the employees to pull out their cell phones and put my cell phone number on their speed dial. So we're available 24/7, not only to the owners of the company, but every employee of every one of my clients has my cell. So he's serviced at a different kind of level. We take care of adding people on, taking people off, getting them ID cards like most brokers. But we deal with all the claims and the billing and the service and the grunt work. So the owners like it because the employees don't have to spend business time dealing with their personal issues because we're available 7 a.m. to 12 a.m., 7 days a week. The employees like it because who wants to sit on the phone and fight with the insurance company all day. And the companies that have office managers and HR, they love it because we do all their work.
Yeah, I can imagine that's a huge benefit, especially for employees. And that's always been the impetus or the reverse of impetus for change. I don't want to change because I don't know if my doctors are going to be on the plan. I've got a rhythm with my current insurance company. I don't want to upset the apple cart. And so you're kind of like taking away all those objections on the upfront and you're really investing a lot of time and effort into the pre-work in order to get the deal rolling the right way.
Yeah, and even if they end up staying with the same carrier, because like we just became broker on a group, they're in the middle of their plan year with AmeriHealth, they're a New Jersey group. United Healthcare is $4,000 a month less expensive for this 20-person group. But the employees would scream if we switched in the middle of the year and half these people met their deductible.
Right.
So, but they said, we don't get any service, so we're taking over as broker, and now we're going to run an employee meeting, and the HR person is thrilled because she has to deal with all the claims and the bills and all this stuff now, and now we're going to take that over from her and make her job a lot easier so she can help on building the company and not having to deal with did this claim get paid right and things like that. So we're becoming their broker. And then when they come, 2 months before the renewal, we'll then start the process, get them moved over to United Healthcare, do the doctor searches, and do all the stuff that we plan to do if it happened to be their anniversary. And so very often we'll become their broker in the middle of the year just because they're just not getting any service and they're not offering the kind of products and services we offer.
Mm-hmm. Are you seeing on your side of the fence, due to mergers and acquisitions, broker servicing kind of fall off the cliff where, a broker who had a great relationship with a client sells their book of business to a much larger firm, and now the client is like, I've been delegated down to a junior associate. They don't know how to answer my questions. I don't get callbacks. The service is terrible. Are you seeing that?
Yeah, especially, even with the larger groups. So we became broker on this 250 person company because of our service model. They were using a very large national general agency. And when I met with the head of HR, the CEO and the CFO, and I explained how we're customer service, and this happens to be a nonprofit school for kids with autism. And so I said, what exactly are the teachers who work 7:30 to 3:30 calling the insurance company when they have a problem? And she said, they're not. I said, well, they don't have any problems. Oh, they have tons of problems, but they call me. And I said, so what do you do as head of HR? She goes, I call Mary. I said, who's Mary? Well, Mary's Tom's assistant. Tom's our broker. And I was like, and Mary's only available 9 to 5 Monday through Friday. And Mary works for the insurance company. She's not really working for you. So is she going to fight Oxford when her salary is getting paid no matter what? Versus when we come on board, the employee calls me, and to show you how old fashioned their firm is, they still fax me their claims. Okay. Yes. Believe it or not. But, and I said, yeah, that's not how it's going to work. And the first week after we became broker, one of the employees called me, and it was like a Tuesday night, like 9 o'clock. She's like, I'm really sorry to call you so late. And I was like, it's okay. What's going on? She said, but I'm losing my mind. I have a $5,000 bill that's 3 months old, and I don't know how I'm going to pay it. And they're going to send me to collections. And I said, doesn't make sense that you should have even gotten that bill based on your plan and the way the plan works. So do me a favor, send me over the bill. Well, she sends me over the bill. It took me about 3 minutes to realize the bill was processed wrong. She went in through the emergency room. It should have been a $250 copay. Deductibles and co-insurance shouldn't have even applied. And I called the insurance company the next morning. They confirmed it. I called it back. I said, throw the $5,000 bill in the garbage, send them $250, and call the collection agency, sign a HIPAA authorization, and we'll call them and get them off your back. They're not going to cancel the debt, but they're never going to hear from the hospital once we tell them what's going on, and you're done. And needless to say, she went to HR and was blown away by what we just did for her.
Yeah.
And that's what we do for our clients, whether they're 2, 3, 4 people or 2, 3, 400 people, they get the same service model, the same access to me.
And what you just described is the expertise model of customer service that goes beyond just the norm. And what's lacking, not only in the insurance business, whether you're on the benefit side or the P&C side of it, it's really lacking in a lot of industries today. And that's why there's so many frustrated business owners. And when you offer a service like what you're talking about, I'm sure they're customers for life at that point.
Yeah, I mean, we've had clients. I was kidding around with one client the other day because his son is finally taking over the business from dad, because dad had 3 brownstones and sold the last of the 3 brownstones for $10.5 million and decided, okay, it's enough, I can retire. And I was kidding around with the wife because we were signing all the papers to transfer everything over to him. And she said to me, so how long do I know you? I said, well, how old is Jimmy Jr.? And Jimmy Jr. is 39. And I said, so then I know you 38 and a half years because I met you when you were pregnant with Jimmy Jr. And we have a lot of clients 20 and 30 years. Our retention ratio is over 92%. We
Yep.
lose very few groups once we get them, because if we have to rewrite a group for less money, we're going to rewrite a group for less money. And the way we're able to service thousands of employees in 34 states now, mostly Northeast, is because I have a back office company called Benefit Mall. They're one of the largest general agencies in the country. So they give me the clout to negotiate best rates for large groups over 100, and the ability to service thousands of employees with everybody calling 3 people. I have a huge team behind me at Benefit Mall that's probably close to 100 people that help me service my clients.
That's great. And maybe for the audience, there's different layers of how brokers in the benefit side of it and the P&C side of it can access the market. And what Jeff is talking about, Benefit Mall is what's known as a general agent. They're kind of like what could be considered a wholesaler. Jeff's a retailer, and the insurance company would be like the product manufacturer. So it's just different varying points of distribution in the marketplace, and the same thing exists on the P&C side. And that gives smaller brokers like each of us the ability to work and act and perform like the biggest brokers in the country.
Yeah, because I couldn't service hundreds of groups and thousands of employees with a staff of 3, because it's very normal, it's very labor intensive. With our service model, it's even more so. Just like on your side of it, you can't service hundreds and thousands of people unless you have a back office to help you do that. It's not possible to do that.
Right. So before you were talking about small group, which is 2 to 100 employees, let's just for a moment talk about what the health insurance market looks like for self-employed individuals and small businesses with less than 2 people, like one-person groups. What does that look like?
Yeah, unfortunately, there's not much available for the sole props, the one-person groups. So what we try to do is try to figure out how to make them a group. Sometimes, like what we did one the other day, it was a husband, wife, and son, but they all worked there. So, and they were all on payroll or 1099s, because 1099s are eligible if they have an independent contractor agreement. And I said, so why don't we just make it husband, wife, and son as a single, same, but now you're eligible to. And they basically said to me, well, why didn't my broker tell me that? I said, because your broker doesn't want you, because you're a one-person group. And so we don't treat our 1 and 2 person groups any different than the larger groups. And we try to think outside the box and come up with a creative legal solution that works for them.
Yeah. Yeah. In the old days, it was easy enough to come up with something creative where you could, include a non-employee on your insurance plan.
Yeah, you used to be able to cover your aunt, your uncle, your cousin, your brother, and
the
now,
good old days.
Yeah, now, compliance, you got to show payroll, you got to show, everything's documented and cover your ass kind of stuff. And so everybody is worried about compliance. So you can't just fake it and make up a group or put together small businesses. There used to be association plans.
Yeah.
There's not really association plans anymore, because the insurance industry doesn't want that, because there's no employer-employee relationship. So you can't just cover somebody that's, I'll get a lot more people, so the rates will go down. Yeah.
Yeah, it doesn't really work that way.
It doesn't work that way. Now it's 2 to 100 employees is the same rate. And
so that was the next question. So 2 to 100 is community rated in New York, and that's also what constitutes small group in a lot of other states. Some states is 2 to 50.
Correct.
What happens over 50 or in New York over 100? What does that look like?
Well, it's large group. It can be an advantage, and sometimes it can be a disadvantage, because it's based on census, it's based on claims experience. There's a lot more factors. But on the other side, there's also a lot more carriers and a lot more flexibility. There's negotiation available when you're a 100-person group. For that 250-person group, we showed them a concept called the difference card, which was designed for larger groups, a way that they could keep high-end benefits. This was a school that had a platinum plan with a regional carrier called Emblem. And they they wanted to, see if they could shop, but their claims experience was really bad. So we brought in this concept called the difference card. And for large groups, they don't have to switch carriers. And because nobody wanted them, they couldn't. You can switch in the middle of the year, even though it's because the insurance industry is considered the difference card a different vendor. And the employees don't really care because the way it works, very simple, it's more complicated than this, but I'm going to give you the kind of the overview. So they go from so it's designed for companies that have a platinum plan that don't want to deal with high deductibles.
Platinum meaning top of the line, otherwise known as a Cadillac plan.
Correct. So they have this group had a 20-40 copay, 20 for primary, 40 for specialist. They had no deductible at all. So they went from a 20-40 copay to a $70 copay. They went from no deductible to a $3,000 deductible. And they went from no co-insurance, which is money you could lay out of pocket in addition, to 30% co-insurance. So obviously, because of that, the company is going to save a fortune of money because you're going from a platinum plan to basically a silver plan. But
let me just back up. So where the employee assumes a lot more risk.
Correct.
Okay.
Correct. But the beauty of the difference card is employees get two cards: regular insurance card, in this case emblem, and the difference card. They go to the same doctor. Doctor says, okay, it's a $70 copay. Well, they hand them the difference card at the doctor's office and they swipe the difference card for the $50. So from an employee point of view, they still have the platinum plan, but the company is saving tens of thousands and funding hundreds. And it's all contractually guaranteed on the downside risk. So we know going in, we're going to save you if everything goes bad and every employee maxes out and gets sick. Here's what you're going to save. The first year with this company that had a bad claims experience, we saved them $175,000. And when I ran the employee meeting and I said, same doctors, same copays, you've got to just use two cards to get there and no increase out of your paycheck. The employer's like, okay, good. We're going back to work. Who cares? We don't care about anything else. And so, on average, when we move a client to the difference card, we save them between 18 and 22%. But our back office company, Benefit Mall, has one of the exclusive contracts for the product. So not every broker could get that.
Interesting.
Because I'm one of the elite brokers, Benefit Mall has about 2,000 brokers throughout the country. And there's about 100 of us that are considered elite brokers that get this white glove service and access to that product.
So what's the price difference again between this platinum and using the difference card? About
30%.
30%. So the client, the employer is assuming more risk, but that downside risk is capped contractually. Why don't insurance companies just create this themselves and come out with a more attractive product?
I think because this product with the difference card is already set up and they have all the technology and they know how to process everything and they do everything and it's a reasonable rate that the insurance companies don't really want to mess around with it.
And I guess the other answer to that question is why would they want to give up 30 points on their profit?
That's the bigger thing is that.
Yeah, let's just cut the crap and get to the bottom line.
Yeah, I mean, most brokers don't look to save clients money. They look to mitigate their rate increases, but they don't look to lower their costs like we do. Like when high deductible plans came out 5 years ago, okay, we started looking at the numbers. Once the numbers got to the point where there was no risk, we contacted every single one of our clients and said, hey guys, you have to look at these numbers, knowing full well that we would take a huge financial hit. Now over 90% of our clients in the 2 to 100 space are on high deductible plans. And in 5 years, not one of them has gone back to a traditional copay plan because they're always saving money. And my feeling was, I'm in this for the long run. I've been doing this 41 years. I'm in this for the long run. let's do what's in the client's best interest that's going to save them the most money. And I'll make up for it by keeping the clients. They'll refer me more business. The business will grow. And it's exactly what's happened.
Yep. Yeah. I totally agree with the philosophy there. And for the viewers and listeners, so Jeff took a haircut because he was reducing the employer's cost for insurance, the premium, and Jeff's compensation, like mine, is based on the premium. So it's the same percentage. So we're going to take a haircut on our commission. And that's why a lot of brokers on both sides of this fence don't actively look for savings for their clients, because then they know they're going to get a reduction in their pocket. So I think it's a wise choice. It always do right by the client. It's always going to do right by you.
Yeah, and that's why, like I said, over 90% of our clients are on high deductible plans. And the typical question from the client is, well, if this is so good, why didn't my broker show this to me? And I said, it's more work, it's less commissions, because they're not running employee meetings. They don't want to deal with claims and billing and service. They're not giving out their cell phone number to the employees, especially on the small groups, the 2, the 8, the 10. They want 50, they want 100, they want 500 people. They don't want 2 to 50. They don't want the 8-person group, because it's just as much work writing an 8-person group as it is a 100-person group.
Right.
And so they don't want that. So they don't try to show them even less premium, because then they're making even less commission, and they're not making that much commission to begin with.
So this high deductible difference card thing, what's the sweet spot in terms of the number of employees?
For the difference card, it's 30 employees or more, and it can go up to 500, 600, 700 people. For the high deductible, if you have a business in New York, New Jersey, and most of Connecticut, depends on where in Connecticut, and you have a health insurance plan with copays, you are literally throwing away tens of thousands of dollars for no reason. Because what's happened in the 2 to 100 space in New York, New Jersey, and part of Connecticut is the difference in the premium between a traditional copay plan and a high deductible plan has gotten so big, there is no risk, because the best case scenario under a gold plan is worse than the worst case scenario under a bronze level plan. So there's no more, what if this happens? What if that happens? It doesn't matter, because when we do a comparison on the groups now, we did one yesterday, 5 people. His worst case scenario savings, assuming all 5 people all get sick all at the same time and all max out at the same time, he's saving $25,000.
That's on a 5-person group.
On a 5-person group.
That's a lot of money.
A lot of money. I mean, we just did a renewal on a 20-person law firm that we moved from Oxford Liberty Gold to Oxford Liberty Bronze. His worst case was $40,000. His best case was $120,000. Saved him $91,000 the first year.
Wow. So in that 20-person law firm group, the plan changed, but it stayed with Oxford. So all the doctors stayed the same. So you're basically just shifting risk around, reallocating it, paying for it in a different way, playing the VIG, and the employer comes out ahead of the game all the time.
Not only does the employer come out ahead all the time, the employees come out ahead all the time too, because only 3 things can happen with claims. You can have very little claims, you could have surgeries, or you could have major claims. The way we set this up, so we save a company $1,000 per month per family going from a gold plan to a bronze plan. Okay, it doesn't matter the carrier, $1,000 a month. The way we set it up, the employees pay the first $500 of claims. They put it on what's called a flexible spending account, which is pre-tax. They can roll it over if they don't use it. So if they never go to the doctor, no risk. Company funds the next $7,000 on something called an HRA, which is basically pay-as-you-go health insurance.
Right.
The company will fund $7,000 when and if an employee has $7,000 worth of claims. Well, if the company is saving 12 and funding 7, their guarantee savings is $5,000 a family and $2,500 a single, which is why on that 5-person, 5-family group, we came up with $25,000. But from an employee point of view, 3 things can happen. all plans have what's called a max out of pocket, which is the most you could pay no matter what. Well, the max out of pocket under a gold plan is $10,400. Under a bronze is $13,500. So it's a $3,100 risk. But company's giving you $7,000. So as crazy as it sounds, the sicker an employee gets, the more an employee saves. Complete opposite of you would think, oh, if I get really sick, it's going to cost. No, it will actually cost you $4,000 less out of your own pocket as an employee, with the company still saving $5,000. And even if there's surgery, $1,000 hospital copay, $1,000 deductible. So it's going to cost you at least $2,000 to have your knee surgery. All right. Our plan, $500 pre-tax, because what counts with the high deductible is what's called the contracted rate. The hospital charges $25,000 for surgery. But what the insurance company allows on that is about $4,000. So now you got a $4,000 bill from the hospital, you got a $3,000 bill from the doctor. Now you got $7,000 worth of bills. What are you going to pay as an employee? $500 pre-tax, because the company gives you the $7,000. So you save money. And then even if you're pretty healthy, you have a couple of doctor visits and a couple of prescriptions. Well, your prescriptions are $50 a month in copays. So that's $600. Another $200 in doctor visits. So you spend $800 in copays. Our scenario, $500 pre-tax. So employees save a couple of $100 to $4,000, with companies saving $5,000 to $12,000. So claims are irrelevant.
Yeah, plus the VIG on the tax pre-tax dollar.
Correct.
Yeah.
So it's a win-win all the way around for both the employer, but just as much, if not as big a win for the employee.
Right. And if an employer hasn't gotten to the point of employee participation on premiums, I would imagine that doing this kind of a deal would blend nicely into that conversation, wouldn't it?
Yeah, absolutely. We can set up a company however they want. If they're paying 50-50 splits, we keep it 50-50 split. But now you tell your employee, instead of having a $1,000 deductible and a $1,000 copay, you're going to pay $500 and then you're done. They win because when they need it the most is when the money kicks in. So when they get sick and have the major claims, they're going to pay less out of their pocket. So they don't really care that the premium hasn't gone down, because their responsibility has gone down. Their claims have gone down. And that's what people care about is, God forbid something major happens to me, what's it going to cost me out of my pocket? Well, with the high deductible plan, because of the savings that's guaranteed, it's going to cost an employee less money no matter what.
Yeah. That's interesting. And then what happens on the renewals? Do you just have to kind of rejiggle the math to make sure it all works out? I mean, it's going to probably always all work out.
Yeah, because the average increase on a high deductible plan is not only lower percentage wise, it's on a lower number. Because if you're paying $3,000 for the gold plan and you have an 8% rate increase, well, that's $240. If you have that same increase on a $2,000 deductible, it's $160. And that's what's happened is over the last few years, because when they first came out, it was a $10,000 risk with a $5,000 premium savings. It's reversed now, and it's gotten to the point where it doesn't really matter, because like I had a factory guy that we did a renewal on back in February, and he said to me, I don't think this thing worked. Okay, why don't you think it worked? Well, I was writing checks right and left for the claims because he's not used to that. Finding all these claims and 500 here, 1,000 here, 100 here, whatever. He's got about a 30-man group. And I said, okay, let's do the math. I said, you had the Oxford Liberty Gold. I said, you would have paid $276,000 had you had the same plan as last year. Okay. I said, what did you pay in claims? He said, $52,000. I said, great. And your premium was $180. So you don't think it worked, and you saved almost $40,000. And he's like, never mind, thank you, have a nice day, because people don't look at the numbers. They hear platinum, and they think a platinum plan has got to be better than a bronze plan. A claim is a claim is a claim. The only difference between a platinum plan and a bronze plan is who's paying the premium and who's responsible for the claim.
Yeah.
And do you want to pay $3,000 a month to Oxford and have no claims? Or do you want to pay him $2,000 and have no claims? People don't think that way. They just look at numbers, or they hear platinum is better and you want the best of the best. I mean, we do a lot of work with nonprofits, and they always say, we're going to give them top of the line benefits because we don't pay them great. Well, we have a Habitat for Humanity group that will strongly disagree with you. After the first year of moving them to a high deductible plan, we saved them $67,000 on a 14-person group.
Wow.
And the employees didn't care, because with them, we set them up with a $7,500 deductible. The employees paid $500. The organization covered the remaining $7,000. So employees went from a $5,000 max out of pocket to a $500 max out of pocket.
The numbers just they're almost unbelievable. But
well, because for any business, the three biggest expenses are payroll, rent, and benefits.
Yeah.
Doesn't matter how big, how small. So it's a huge number for any business. And that's why we can throw around these $20, $30, $50, $100,000 numbers like it's nothing, because the numbers are stupid. The cost of health insurance, like a lot of these insurances, are off the wall. It's not getting any better, and the numbers are crazy. So
well, and when an employer gets a renewal bill and it's only up 8%, they're like, my benefits are only up 8%, like they're jumping for joy.
Correct. Yeah, like this large group, okay, when they came up for renewal with Emblem a year and a half ago, they were going up 8%. They were fine with 8%. I wasn't. And then I shopped around with other carriers. Well, their claims were a little bit better. So we moved them from Emblem to United Healthcare Freedom Network. And I played the two companies against each other with Benefit Malls Health. And instead of getting an 8% rate increase, they got a 0. Because I just said, guys, look, you're at 8, you're at 6. We're going to play this game back and forth. I'll throw in the dental plan. How about if we just give them 0? And then I called the client. The client had no idea. And I called the client. And I said, all right, listen, we're going to move you to United Healthcare Freedom. Really? That's a national network and better. Because how much is that going to cost me? She goes, 0. You mean 0 above the 8? I said, no, 0 as in 0. You got no rate increase. And then this past January, the claims experience was horrible. They had 2 deaths. I mean, it was just a mess. So they were looking at like a 25% rate increase. So we had no choice. We said, look, I know you don't like the high deductible plan, but how about if we move you to a high deductible plan where you're going to fund 90% of the claims? So it's going to be a copay for everybody anyway. I said, all right, what will that cost us? Well, instead of 20%, it'll cost you 7. So we'll save you about 100,000. I said, and then we should move to Liberty instead of Freedom because you're all New York people. Oh, it's not the same doctors. So we did a search on 500 doctors. Okay, that's how many doctors they used in the course of a year. 500. Yeah. 499 were in Liberty. By moving them from Freedom to Liberty, we saved them another $75,000.
Wow. Wow.
Now, this is all cutting my commissions, but it's saving the client, and it's a nonprofit, and I can't do anything different. And so they ended up saving about, and we're 6 months in, but they're probably about $100,000 less than they were last year.
Wow.
With a 120% loss ratio on claims.
Wow.
Yeah.
That's amazing. Nice job.
So that's what we do and how we work and how we think outside the box.
Great. Okay, so you've described the benefits business. I want to shift gears for a bit and talk about your networking business, because for those who don't know Jeff Weiner, he's the most connected individual on the face of the planet, I think. There may be some people in the White House that know a few more people than Jeff, but probably not. So you run a networking group, you're an avid networker, you share connections as freely as I don't know what the comparison could be.
Yeah.
So why don't you tell us about that?
Yeah, so I've been networking my whole career. Like I said, I've been in business for 41 years. And I built my business because when I started in my business, I was 22. I had no rich relatives. I had no rich friends. And so I started networking before they called it networking. I just connect people to people because they said, you know him, you guys should talk because you'd be a good connection. Okay.
And this was before the days of email. I just want to clarify that as well.
Yeah. So this was before computers. I mean, I started in business.
Exactly. Same here.
1981.
All right, I was the year after you. I started in 82.
There you go. So I started connecting people to people. And then over the years, I belonged to various networking groups. I mean, we belong to one together, but various networking groups and stuff like that. And I said, you know what? I'm tired of going to these groups that $10,000 a year is the same 12 people, or the bagel guy, pizza guy networking group where they're just throwing their new kid out there to learn how to network. So I said, you know what? Let me try this myself and see if this will work. If not, what the heck? And I called a couple of clients, an attorney, an accountant, banker, because I wanted it to be, business owners only. And I started a little over 8 years ago with 12 people. The group and the idea behind it is 12 to 15 people for lunch, business owners and decision makers only. So there's no sales reps, no HR, no marketing people from a company. You get to talk 3 or 4 minutes about who you are, what you do, who's a good lead, who's a good referral, companies you're trying to get into, and how the group works different from every other networking group. Each time you come, you meet new people. It's a rotating networking group. It had grown pre-pandemic to about 200 companies, Long Island based. We were meeting at Capitol Grill every Wednesday and Friday. Then the pandemic hit, and I turned it into a Zoom group. And they said, and people said, oh, well, I know somebody in Florida and California and here and there and, whatever. And I was like, yeah, as long as they're partner at an accounting firm, partner at law firm, senior lending people at banks, and business owners from, 1 to 50, $60 million. And sure, why not? The group is now over 300 companies.
Wow.
We are now in 26 or 27 states and 4 countries. The group has done over $14 million that I'm aware of, and I stopped counting a long time ago. And the only reason I counted at all is because my compliance guy told me if I want to put it on my website, I got to come up with a number. So I emailed people and said, I don't really care, but if you can tell me if you've done business, obviously you are because you keep coming back. But anyway, so we've done over $14 million of business together, which doesn't count a company that was formed from the lunch group 4 years ago, who just turned down 40 million for his company.
Wow.
And as importantly, because charity is an important part of it, we've raised over $1.2 million for nonprofits.
Wow. That's impressive. So today, is it still all Zoom, or are you doing?
All Zoom, and we just added our 4th country. We're in Canada, Israel, the Netherlands, and we just added last week Spain. And these are all people who were in foreign countries who do business in the U.S.
Yeah.
Who want U.S. contacts who were referred by, and the group has grown 100% by word of mouth. There's no website. There's no master list. There's nothing to join. There's no fees. And because we're not meeting in person and paying Capitol Grill the $35, I decided, you know what? Why don't we pick a different charity each week? And we're asking people, if they're in a position to do it, to donate the $35 to a charity, and if they can financially do it, because not everybody can. And we probably raised about $50,000 or $60,000 during the pandemic for regional charities.
Unbelievable. That's a great story. I mean, the ability to shift from 2 lunch meetings a week to all online on Zoom, and growing it, year after year, and expanding the reach, just phenomenal stuff. If somebody wanted to get in on this, what would they do?
Yeah, they can either shoot me an email at jeff@hkmassociates.com or give me a call on my cell phone, which is 516-316-1255. That's 516-316-1255. Happy to have a conversation about the lunch group and see if you're a fit and add you in as we go.
Great. And any plans on going back live anytime soon, or is Zoom just so convenient?
It's gotten too big because I've had people who were, part of the original group or Long Island people. They're like, well, when are you going to go back in person? I can't, because Manhattan people weren't coming to Long Island, to Garden City for a 12 o'clock lunch, much less somebody from Canada or Florida or whatever. So, but what we started doing about 3 years ago, which we will continue come fall into the winter, is every quarter, there's a place in Huntington, Long Island called Appliance World. Appliance World is an appliance store that has 7 live kitchens. So what he does is he will donate the space to a nonprofit to run their event. You have to provide everything, but once you're in, his staff runs the event. So we go and get chefs, we go and get restaurants, we go and get raffles. We have a great musician who's who's great background music and very reasonable. And we do like a 2.5-hour networking food cocktail party every 3 months. And we pick a different charity and we raise $10,000-$15,000 at these events. And the tickets are $55 because of Five and Alive, which was an organization I started 5 years ago as a fundraising organization. It's not a 501c3. What happened was my daughter is a stage 4 Hodgkin's cancer survivor. And 5 years ago, I was involved with leukemia lymphoma with something called Man Woman of the Year. And what that was 4 businessmen, 4 businesswomen, 10 weeks raised the most money. And so one of my clients nominated me. He said, everybody, you'll kill it with this thing. I was like, all right, so what is this thing? And I met with them and they said, well, we'd like you to raise $50,000 in 10 weeks. I said, yeah, all right. I know enough bankers and law firms that have budgets. Yeah, I can do 50. So I sent an email out to my lunch group, and this kind of gives you an idea of the group. And 20 on the I said, all right, guys, I want to run a bunch of events inexpensively because nobody's writing the $50,000 check. So we did. So I had to come up with a team name, and it is called Five and Alive because my daughter was 5 years cancer free at the time. And so the tickets were, because everything we did, we got donated. So the tickets were $55 and $550 for one sponsorship and $5,500. And we ended up doing 5 events in 10 weeks. And when I met with the committee, I said, guys, we got to come up with a number. They're asking for 50. And they said, no. We know how competitive you are. You know how competitive we are, especially for charity. So call them up and ask them what the record is. And I did, and the record was $167,000 in 10 weeks. And so we set our goal at $200,000. And we raised $219,000.
Oh my God.
And so we had so much fun that I bought the domain name, and now we continue to fundraise. And now, like I said, we've raised over $1 million too.
Wow. That's a great story. Great story. So I want to be respectful of your time. I know we could probably go on for another hour, but if people wanted to reach out, you gave us your cell phone number, which I'm going to put in the show notes. You gave us your email address. You're pretty active on LinkedIn, right?
Absolutely.
Yep. Reach out and connect with Jeff on LinkedIn, and I'll put all of that in the show notes. Any final comments?
No, this was awesome. I really appreciate you giving me the opportunity to talk to you.
Yeah, I'm glad you came on the show. It's been a great conversation. So Jeff Weiner, HKM Associates, benefits, life insurance, and massive networker with a cause. So Jeff's got a big heart. And like I said earlier, I'll get a random email at 2:00 in the morning, I'll look at my phone early in the morning and say, oh, Jeff emailed me at 2 this morning with an introduction. And sometimes it leads to business, but it often leads to great connections, which I deeply appreciate. So thank you for being on, Jeff.
My pleasure.
My name is Gordon Coyle. I am the host of the New York Business Leaders Podcast. If you have an interesting story that you'd like to tell, contact me. I'll put my phone and email also in the show notes. Reach out, let's chat, and get you on the show. Thanks, and until next time, be well.
That's it for this week's episode of the New York Business Leaders Podcast. Be sure to subscribe so you don't miss next week's episode. In the meantime, find more interviews and resources at nybusinessleaders.com.